Let's dive right into this seminar on how to trade SPY profitably and with a simple strategy. So we're going to break this down into 3 steps. Step number 1 is you're going to want to analyze market conditions plus TA, which stands for technical analysis. You're analyzing the chart, the larger perspective first before you zoom in. I'll show you guys my process for doing that. Step number 2 is you're going to want to chart key levels as well as supply and demand zones. I will briefly cover these 2 topics and I'll show you some examples of each. And step number 3 is use a simple scalping strategy. So I will walk you guys through a trade example that I just did on SPY yesterday as of recording this, where I had $2,000 in my thinkorswim account and I was able to make a total of $1,200 by the day's end, and that was a little bit over 60% growth. Most of that coming from just one trade, because I am a big believer that you don't have to trade 5 to 10 times per day. Some people like doing that. For me, I really like to zone in on 2 to 3 really high probability setups, and that works best for me. So I will go through that trade example for you guys. Let's dive right into step number 1, which is analyze market conditions and technical analysis using SPY. Now, ultimately, when you're doing this, you're looking at the macro trend first, and you're just trying to figure out, are we in a bullish trend or a bearish trend? And obviously, if you're playing options, bullish equals calls, bearish equals puts. If you guys have not watched my simple breakdown of how to trade options for beginners, I also have that video, which will be linked somewhere up in the top corner. But let's go look at the macro trend point of view on SPY. So I personally like to start really far out, like the 3-year chart. This is really dependent on you and your trading style. But for me, I just always start 3-year and I start to work my way in, especially if we are taking out yearly lows. You need to look at previous data to figure out potential support levels. So when you're looking at macro trend, you can obviously see that we have started to form some type of base here and some support here. So in my opinion, I don't really need the 3-year chart because I see we have a low here and a low here, which we are above. And so for me personally, I'm not interested in the 3-year. I'm going to zoom into the 1-year. And now I can start to see that we actually have a pattern forming, and I wonder if you guys can see it or not, but it is a potential head and shoulders. So we would have a shoulder, or inverse head and shoulders, excuse me. So we would have a shoulder here, the head here, and a shoulder right here. And I do want to point out that somebody in the Discord actually did some studying over the weekend and pointed this out, which is great. It's always nice to have other eyes on the markets. I'm only one person. I only have 2 eyeballs. And so if you can have multiple people who are all looking for the same thing, the same education, it just amplifies the overall skills of the community. So I'm super appreciative for everyone in the community putting in work to help out others. Shout out to him. But yes, inverse head and shoulders here, which is a bullish pattern. So again, we have a shoulder here, head right here. And so with this is me just looking at the macro trend, macro point of view. And I also want to take note where we are. We're nearing that psych level of 400. And this is just me walking you guys through my exact process that I did yesterday, Monday morning, before I took any trades that day. Is I'm always planning ahead of time. I'm always prepping my levels, prepping the charts, and understanding what's going on before markets even open. That is absolutely crucial, especially if you work full time. I also have a video on a simple strategy you can use if you do work full time. Make sure to check out that video as well. But back to the chart here. So overall trend point of view, we are pretty bullish because we are making higher lows here. You can see some lows, some lows, some lows, and they are forming higher support, which is bullish. However, with us nearing the 400 psych level and looking left, we have had some resistance in this level. Now, there's still more room to the upside. About 410 to 409 would be the extra stretch over 400. So there is possibility for more range. I do want to keep in mind that we are about middle way through this move right here. So the further we go up, the more risk you're going to be taking on the call side. So you just want to keep that in mind with your sizing where we are overall on the chart. Let's draw a simple trend line really quick. I'm a big fan of simplicity, and I do want to show you guys this simple trend line which lands, let's do right about here. So we have attempted to break it multiple times. Trend lines are very subjective. You can move them to basically meet your bias. That's why, they're not concrete. You always layer things on top of one another. But you can see right here, we are touching this trend line. We've hit it before here, and we've rejected pretty hard and you can see that we are starting to reject as well. So this will be a very, very, very key spot near this 400 psych level, and to see if we can actually form higher support and continue the trend above, actually break this trend line in C410. So there is possibility for calls, but since we're in the middle, there's also possibility for puts. So right now, trend in my opinion is up, but it's always good to have both scenarios, bull and bear, in mind when you're trading. So now that I've done the yearly, let's just go to the 180 day and let's see what we're looking at right now. So you can see this trend line on a better perspective, and you can see we've rejected it pretty clearly. And right now we are hovering right near it. So I have that in my head. You can use your little notebook if you're going to take notes for the day. I'm a big fan of journaling. And you can just write that down. That way, if you're coming in between your lunch break or work and you're not able to watch the screens all day, you remember those notes that said, okay, we're near that 400 psych level. We're also near the trend line. Just take notes. So that way, if you're coming in, you're not impulsively making a bad decision based off lack of planning. So key tip there, let's keep going here as far as macro trend. So like I said, we are about midway through the move. You can see there is more range to the upside around 410. However, there's definitely some range to the downside. So just a quick ballpark here. If we're sitting at 400 and I see some solid support at 380, that's a 20-point down move compared to a 10-point up move. We are no longer in a really, really nice risk versus reward area when it comes to the macro point of view. And I hope you guys can see why 20 points down versus 10 points up. Your risk versus reward is getting thinner and thinner. Think about walls closing in on you. So like I said, that does not mean that I'm going to avoid calls. I'm just going to keep that in mind when I'm looking at sizing, when I'm day trading. I'm not going to go super, super heavy, especially if I see key levels lost and some weakness, because I know there's a ton of potential to drop back down to that 380 support. So let's keep zooming in here. So macro trend, macro point of view, I have an understanding of what the chart looks like. This is just you walking through different time frames to understand, okay, where do we catch support? Where do we catch resistance previously? And where are we now? So I'm going to go ahead and go to the 20-day 1 hour. And you can see right now something that I just posted to the group that was pretty simple is you can see we have a trend line here. Now we're looking at the closer perspective. A lot of people have this question, right? And they say, well, why am I looking at the 3-year, 1-year, 180 day if I'm day trading? You know, shouldn't I only be looking at that daily or the day before? And some people do trade like that. For me, I like to have as much data as possible to make the most educated decision. And that way, if things start to turn against me, I'm prepared for either the bullish case or the bearish case. Okay, so now what I'm seeing on this chart is, yes, we are still in an uptrend. We do look strong, but like I said, we're approaching that 400 potential trend line here. We also have 400 as a key psych level. And then it looks like there is a possibility we could see 395 hit, because that is trend. We've hit it here, bounced here, bounced here, bounced, and we are still making higher lows. So in my opinion, it would make sense if we came back to hit this 395 level again to then gain momentum to try over 400 again. Just that's a little scenario I have in my head if we do see some weakness and rejection against 400 again. Hence, this is why I was also looking at a short yesterday, because we were rejecting that 400 level and I saw the potential for a 395 pullback. It does not mean I was aiming for 395, but it did mean I was looking for pops to short, because I was a little bit leaning biased towards the fact that we could retrace as long as we were under 400. That was a key thing for me. We were holding under 400, therefore that plan was still intact, and that was ultimately why I was looking for puts yesterday on SPY. So now let's zoom into the 5-day, 5-minute, and you can see this trend line even better, and it's been respected pretty well here. So I am going to go ahead and do something that if you watch my YouTube videos or if you're in my community, you know I preach. If you see a key level like this, do yourself a favor. Go up a little bit, set an alert, create an alert. I don't know, I'm just going to pick a random number, but set an alert a little bit above that level. So if you're busy that day, you're at work, you're doing your thing, and you're really not trading or you're not finding something that you're super interested in, what if we have a massive move down off of news? It is Wednesday. We have a ton of news coming out, FOMC speaking. If I set an alert and it gets hit, then I automatically know from all of this due diligence that I've done, that's a good spot for me to potentially look for calls, because we are near trend line. And we are still in step number 1. We're kind of migrating into step number 2. And just to go over that one more time, you're analyzing the market conditions and technical analysis. That's what we've been doing for the past like 10 minutes. It does take a solid amount of work, but once you find your workflow, it becomes easier. Or if you're in a community that does it for you, that's also a perk. But step number 2, chart key levels plus supply and demand is what we're about to head into. And then the last part of this video is I will walk you through what simple strategy I used to scalp the SPY puts and what I was looking for. Have a few other indicators I use that I like to layer on top that really help dial everything in, but we're going to keep it simple today. And so let's go now into let's see if I can do 1 day 5 minute. Yeah. All right, so 1 day 5 minute will allow us to look at yesterday's price action. And now I want to bring up a key level that I had set. Okay, I put my levels back on my chart and I had a key level of 398.48. And this is a mixture of different things, a strategy that I also created on my own. And I really have been back testing it for the past couple of months and I absolutely love it. So with this level, what I was looking for is I actually missed the A+ setup, which was the obvious short right here. That's okay. If you miss one side of the move, wait for a bounce, wait for a rebound, wait for a better entry. Do not chase unless you are very quick, because a lot of times chasing will get you in trouble. So I waited for this move to exhaust. I did catch one little put scalp right here, but my big trade was in fact right in here. Or excuse me, it was 2 o'clock. So my big trade was right in here. You can see it actually happened one time before, but I was looking for a loss of this key level that I had set at 398.48, and I was looking for the 2 p.m. volume to come in. So I mentioned this a lot of times in my videos. You have to understand timing of the market, right? You have to understand rotation of timing. So if you are not trading 12 to 2 p.m. because that's the lunch lull and that's lower volume, then you also need to understand typically people come back in at 2 p.m. and I'm talking Eastern time. So I was looking for the next rotation at 2 p.m. to come in to see if we could get lower highs and then lose that level to then in fact come back down to 398, which was my target. And this move right here was where I caught 100% on 398 puts. I was in fact trading 0 DTEs. I often do that. I also often get asked what expiration date you should choose on option contracts. I go over that a little bit more in my options video that I mentioned earlier. But that's really just up to you and your education level and your risk tolerance. For me, I'm a big preacher of go further out in the beginning to give yourself more room for error. But my ultimate goal was always to play short-term expiration because that's more volatile. They are way more risky. However, you can make way more money. This one move right here, I made 100% just because of timing. Options are all about timing. Now let's move into step number 2, which is what we just talked about, the key level that I have at 398.48. People do key levels differently. You can go back the day before and just look where price action bounced off or bounced to, where we caught resistance or support. And then you can also include supply and demand. I will make a separate video if you guys want more information on this. It has several different names, right? You can use imbalances, supply and demand, FEGs. There's just so many different names for certain things and indicators and strategies when it comes to the trading market in general. But just the general idea is you want to start to identify where big banks and institutions have their orders. A lot of people also, can trade order blocks, and there's just so many different terms. But just think of them as big banks and institutions with large amounts of money, and that is what makes these big moves in the market. These big moves do not come from retail traders. They come from big banks and institutions. And so whatever method you choose, that is another thing that you can layer on top your key levels, and you should be able to get some form of strategy when it comes to looking for possible entries and exits other than just those basic trend lines. A simple strategy, right? Old resistance can turn into new support. So I would draw that as a potential level. We also have got, let's use something a little bit closer in time frame. We've got a lot of wicks here and here. So I'm going to go to the 10-day now. And there's a lot more. I'm already on the 10-day. I'm going to go to the 5-day. There's a lot more that goes into this, but again, to keep this simple today, we're just going back to see where price bounced. So where did we catch support, right? Because if we're looking for a move to the downside, we want to see where potential buyers are sitting. And so this large move right here, this would be a potential area for me. So let me draw a better level for you guys. So low on this is 395.53. I'm going to double click. We're going to double click this and we're going to make this yellow and we're going to show the price on the left, hit OK. All right, so let's zoom back out. And that's an example of just drawing a key level. So you can see this key level got hit the next day and was potential support for that next leg up. So going back a few days and drawing those levels is part of your pre-market prep, part of planning ahead of time, and then setting alerts. So if your levels get hit, then you in fact can participate without having to watch screens all day. So whether it's drawing levels, using supply and demand imbalances, all that good stuff, you're basically just looking for potential areas of support. So that way that you can be patient enough to let the trade come to you. Or if you're shorting, you know potential areas to take profits. So let's draw one more level here. So let's go back to yesterday. And so yesterday I was using a different strategy for that 398.48 level, but let's just do something that didn't involve that to keep it simple, because that's a very in-depth lesson on how I got all of those levels and information, which is included in the 8-week program, by the way. So right here, let's go back to the 1 minute chart and let's see. So this was my entry right here at 2 o'clock. This right here was my short. You can see there was other opportunities during the day. If you missed this, you definitely had more opportunities. That's the cool thing about trading, is you miss one, just wait for the next. Miss one wave, wait for the next wave, if you're a surfer into all that. So right now, just looking back at this chart, bare naked, no indicators, nothing. One thing that I like to do is look at opening pre-market range. So about the first hour of the day to the first 30 minutes to see where we caught resistance. So we had resistance right here. And I wonder if you already see what I'm seeing. Right here, you see how we caught resistance and pulled back. That was a scalping short opportunity. Then let's see where we caught support on that open candle. Oh, look at that. We caught support on the open candle and moved right up. So there is probably over 100 things that you can do on this chart right now. And that's why it can be so overwhelming for new traders. So to keep it simple, you can draw the opening range right here, and you can see where the open candle caught resistance and where the open candle caught support. And then you can draw one more. So let's see, usually around 10 a.m. we get another spike of volume. So I'm going to go ahead and tag low of day here. So this breaks the chart up into two different segments. This is lower segment, higher segment. And you can see, let's actually see if this lines up. I'm going to switch back to the 5 minute. So, and some people just trade off of these channels right here. So you can see what you would be looking for is for us to come back out of this level, which was higher open range, to lower range, and you could have caught the short. Look where we caught support, right where we caught support previously. Why is it so key to draw simple lines off of candles that caught support and resistance? Because traditionally, if they caught support and resistance once, there's a chance they catch it again. Why? Oftentimes there's order blocks sitting there, there's supply and demand levels sitting there, there's fib levels, whatever you want to call it. There's a reason it bounced, and that's most likely due to institutions and big banks. So with this right here, a simple strategy could just be using the pre-market opening levels of the first hour, the resistance and support, the highs and the lows, and then setting your alerts. If we hit near low of day, look for potential support. We had one bounce right here, which was a great call opportunity, another bounce, which was a call opportunity. Puts, when we kept resistance at this opening range right here, we could retrace back down to support, which was right here. This was a put opportunity. This was a put opportunity. This was another put opportunity. So this is all based on scalping methods, right? And there are, like I said, a million ways to do this. I'll do another video on indicators and stuff like that if you guys want. But all I did really quick was just draw the opening range. Like I said, one more time, resistance, support. And then later in the day, when we came back up to opening range, which was previous resistance, we caught resistance, we caught sellers, we went right back down to support, and that was the simple trade that I took. There were other things involved, there were other indicators I was using, but at the end of the day, sometimes it can be as simple as drawing lines and waiting for where it previously caught resistance to catch resistance again, or where it previously caught support to catch support again. Sometimes it really can be that simple. That was way longer than I had intended, but I do have a lot of people commenting that they like the longer videos. So I hope that thought process, that breakthrough, that walkthrough of everything was super helpful for you guys. I did mention earlier that I do have a trading community. We share trade ideas daily. It's not just an alert service, it's based off of education. So think about a virtual classroom that you can come to the markets every single day with other like-minded traders, bounce ideas off one another, and learn how to become an independent trader. Also including my 8-week program plus a 2023 scalping playbook, which goes more into advanced techniques like I just talked about, but that was just surface level. There's a lot more that goes into it, and strategies that I've developed over the years. After trading 7 years, you learn a thing or two. So with that being said, if you're interested, make sure to check the description box down below. I also have a free day trading seminar. So if you're new to options and you want to learn how to day trade with $1,000, make sure you have the right cash account, all that good stuff, that seminar should help you. And I also have other freebies and YouTube videos. So make sure to just take advantage of all of that. I try to put a lot of time and effort into providing as much free education as possible. But like I said, if you want the extra support, community is where you should go. Gold is options and stocks. Peachy Penny is just penny stocks. And with that being said, I will see you guys next week.